Here are the 5 reasons why the stock market is moving higher in 2023. The first reason being valuations. The market is getting cheap. Now, people will say that the market's not cheap because it trades at 17 times earnings. I beg to differ. When you strip out the top 8 holdings of the S&P, Apple, Microsoft, Amazon, etc., the real PE ratio falls to 13 times earnings. So we are cheap, and the market fell 20% last year. So what else do you need to know? We're cheap. And many stocks within the indexes fell way more than 20%. Some fell 50% plus. Okay, I won't get into all those names. Okay, you can look into all the names here, all these things that we're looking at. Wells Fargo, all these guys have fallen huge. Anyway, so valuations, that's the first reason why the market's going to rally in 2023. We have low valuations when you strip out the top 8 earnings, top 8 weighted holdings. The second reason why the market's moving higher are because of technicals, okay? Price action, okay? Why is price action lining up to be so positive? Because we're going to get into those next 3 reasons why technicals are looking positive. That would be, I'm going to allude to them here. The Fed's getting more dovish. Interest rates are going to rise less, and inflation's falling. So you have these factors that contribute to a bullish price action here in the S&P. As you can see, the moving averages were waterfalling downward. Looks like a waterfall. Whenever you see that, it's a bearish setup. But when they start going sideways and converging and getting tighter, like they're doing here, moving into a very tight range, okay, this is a bullish setup. You also combine that with the MACD cross here, the blue over the orange, and the RSI. It needs to hit 80 before that's considered tired and overbought. So we have room to run past the 200-day moving average, this orange line, which always acted as resistance in the past. We have resistance here, okay, resistance here. But this time looks different. This time looks like we could break past this 200-day moving average. We might fail it at first because it will act as resistance as it has in the past, but as you can see, we're making a strong base here at 380. I mean, this is very strong consolidation here, and we've made we touched 380 many times in the past. We have it in May here. We have it in July, we have it in November, and we have it here in January. So bullish price action occurring in the S&P. Okay, that's the second reason why the market's going higher. First reason, you had valuations are cheaper than people are saying. Second reason, technicals and price action. Okay, traders use these to set all their buy orders in, and when it gets past that 200-day moving average, that orange line, look out. Okay, and we're still cheap. Look at the S&P on a max chart. We have room to run higher. This is a perfect setup going into 2023. Okay, the third reason why we're moving higher is what I alluded to before. The Fed. The Fed is done raising a majority of their interest rates. So as you can see here, in 2025, the Fed's fund rate is supposed to drop to 3%. So if we're near 5 right now, 4 to 5, and it's going to drop to 3% in 2025, that means that 2024 is a year of cutting rates. Well, the market's always forward-looking 12 months. So if we're in 2023 and we're forward-looking 12 months, well, in 12 months, we should start cutting rates based on the Fed's funds rate of 3% in 2025. So they're going to raise a little bit in 2023 as they've telegraphed. 25 basis points, 25 basis points, 25 basis points, but the rate of raising is much slower than in 2022. As a result, you should look to see rate cuts coming in the back end of the year, especially if the economy slows from the quote recession that the Fed's engineering here. Might not get that recession as unemployment numbers are high. And that's another reason why the market's moving higher. The consumer is strong, and the consumer contributes to 70% of our GDP. So if the consumer has jobs, how do you get a recession? You might get an engineered recession, but where the numbers look phony, like in Corona and COVID when we had negative GDP, but the life was still moving on as usual, okay? So that's the third reason. The Fed is going to start cutting rates in 2024, and the market's forward-looking 12 months, so go ahead and start pricing that in now and buy now, okay? The fourth reason why the market's moving higher is because of onshoring occurring in the U.S. So we have Tesla here, an article showing that they're filing to expand their production. You also have Intel Intel here, they blocked out my picture. I have to subscribe to Bloomberg here, but you can still see Intel's manufacturing being built in the facility being built in Arizona. So that's going to ease supply chain problems and make inflation drop even further. Okay, I could give you a whole bunch of reasons why inflation has dropped and will continue to drop. Look at housing prices, look at oil prices, look at supply chains improving, and I could give a myriad of other reasons. Even grocery store prices are coming down some. So if inflation drops, that'll cause the Fed to be less aggressive on raising rates, and that's why I believe the charts are converging and consolidating here for a nice move higher, because the market's forward-looking 12 months and all the stars are sort of aligning for this moment. Okay, so that's the fourth reason, supply chains improving from onshoring. So we have first reason, technicals, bullish. Second reason, valuations, cheaper than people are leading on for them to be. Third reason, Fed is going to be more dovish in 2023 and 2024. Okay. Fourth reason, supply chains are improving, so that'll cause the Fed to ease more. And the fifth and final reason why the markets are moving higher in 2023 is because the market is down, averages, it's 7% a year, and it's down 20%. Okay, the market can't be held down for long. You need to just buy stocks when they're low and sell high. It's very simple. You buy when everyone's negative. That's when you buy. And sentiment is just extremely bearish. It's in the worst levels since 2008 sentiment. So, you just have all these contrarian factors lining up for a rally in the other direction. You have strong employment that is going to buoy the S&P, because the U.S. economy is 70% consumer driven. So for all these reasons and more, I think you have a bull market setting up in 2023 and 2024. The last point I want to make is that if you're in passive income names, such as we are, we don't care if the market moves higher in 2023. We make our dividends regardless, which are about 100,000. Okay. Last year the market was down 20% and we actually outperformed the market. And this year, as you can see, estimated income 95,000. I assume that this will continue as long as these dividends keep coming in, which they will, because they're 4-star funds. See, we're still beating the market handedly. So, and this is all to start the year. And this is because passive income names are really rallying, not just stocks in the stock market. So we're getting best of both worlds. We're getting days gains, as you can see here, and we're getting income of 95,000 a year. So those are the 5 reasons why the market's moving higher. And the 6th little caveat here is that whether they move higher or lower, doesn't matter. Passive income always wins. So I hope you're as excited about the market in 2023 as I am. Even if it goes lower, we're still going to win. But I have reason to believe that we're not moving lower in 2023 for all these reasons discussed. If you like this video, please hit like or subscribe and stay tuned for further videos. Thank you.